My name is Nurul Alisha Shafiqah binti Muhammad Shakun and my registration number is 14DAC 25F1028.
Hello, my name is Muhammad Ifan bin Rahmat and I'm from DSC1A. My matrix number is 14DSC25F1049.
My name is Norfatin Darwisha binti Afzanizam. My matrix number 14DSC25F1006.
This presentation examines the accounting conceptual framework for financial reporting that found in Arisa's grocery business. There is qualitative characteristic, measurement of the elements of financial statement and assumption. We will explain more about all of them.
Okay, right now I will tell the question that our group get. This is the question number 3. This scenario: Arisa owns a grocery shop. She started her business 3 years ago and all the business transactions are recorded in Ringgit Malaysia. She prepares the business financial statement which cover a period of 12 months and she makes sure that the financial statements she prepares are free from bias. When she set up the business, she has no intention to stop the operation of her business, and at the end of every month, she usually took groceries for her family from her shop and record it as drawings. Arisa also purchased a lorry worth 80,000. For the next year, the price of the lorry was reduced to 75,000. The value must be recorded at the cost value 80,000.
The first one is historical cost. Historical cost accounting records asset and liability at their original purchase price. In the scenario, Arisa purchased a lorry worth 80,000 ringgit, but the next year the price decreased to 75,000 ringgit and is still recorded as their original price in balance sheet. Even if the price is decreased in a big amount, we still need to record on the original price. Financial statement must be objectivity, reliability, comparability, and verifiability for stakeholder to understand and trust the company performance.
Other than that reporting period, what is the definition of reporting period? The accounting period is a specific time frame such as a year or half year during which a business records and summarizes its financial activities to prepare business performance report that can be compared over time. This can allow the business to evaluate its successes and weaknesses within a fixed and consistent period. Why I said this is a reporting period because the scenario, she prepared the business financial statement which cover a period of 12 months. For my explanation, for reporting period, according to generally accepted accounting principle, we have the concept of reporting period. A reporting period is the time frame when financial statements are prepared whether monthly, quarterly, or half-yearly. Using the same reporting period each year make it easier to compare performance from the business Arisa 1 year to another and ensure that stakeholders get an accurate picture of the business financial result for that specific time frame.
Unit of measurement, or you can call it monetary unit assumption. In accounting, the unit of measurement assumption means that all business transactions must be recorded in a single, consistent unit of measure, usually the currency of the country where the business operates. Based on these scenarios, Arissa record all the business transactions in Ringgit Malaysia, or you can call it RM, such as purchasing lorry worth 80,000. This situation represents this measurement, which requires that all business transactions be recorded in a common monetary unit. Number 4. Going concern assumption. It is an accounting principle that assumes a business will continue to operate in the foreseeable future, without the intention or necessity of liquidation or significant downsizing of its operation. Like in the scenario, when Arissa set up the business, she has no intention to stop the operation of her business. This situation is perfect for this assumption, which assumes that the business will continue its operation in the foreseeable future and does not intend to liquidate or significantly reduce its activities. Relevance definition means that the financial information provided in the financial statements is capable of influencing the decision of users by helping them evaluate past, present, or future events, or by confirming or correcting their past evaluations. This scenario, Arissa shows that the information provided must be useful and capable of influencing users' decisions, such as purchasing a lorry and record the taking groceries as lorries. Explanation. This situation represents the relevance principle, which states that the financial information should be relevant and helpful for decision-making purposes.
Next, comparability. What is the definition of comparability? Comparability is the level of standardization of accounting information that can allow the financial statement of multiple organizations to be compared to each other. Why I said this is a comparability because the scenario, Arissa always make financial statement of 12 months within 3 years of business. For my explanation, this can show comparability because she uses the same reporting period, which is 12 months each year, which can allow her business performance to be compared from one year to another. Consistent time frame make it easier for owners, investors, or other users to identify trends, evaluate growth, and make informed decisions. In addition, understandability. The definition of understandability is the concept that financial information should be presented so that a reader can easily comprehend it. This concept assumes a reasonable knowledge of business by the reader, but does not require advanced business knowledge to gain a high level of comprehension. Why I said this understandability because the scenario is Arissa record all of her business transactions in Ringgit Malaysia, and she also stated that she took grocery and recorded as drawings. For my explanation about understandability, this can show understandability because using 1 kilo currency Ringgit Malaysia, it can make the financial statement easier to read and interpret. User can immediately understand the value of transaction without having to convert or guess the current use. This can help reader focus on analyzing and the business performance instead of being confused by mixed or unclear information.
Lastly is faithful representation. Financial information of an entity are complete, accurate, neutral, and free from error. Arissa stated that her financial statement is free from bias. Owner must make sure financial statements are complete because investors rely on them to make decisions and also provides them with the reliable information.
In conclusion, Arissa practices comply with conceptual framework for financial reporting, which is historical cost reporting period, coin constant assumption, unit of measurement, relevance, before representation, comparability, and understandability to ensuring her financial statement remain constant, reliable, and free from bias. That's all from us. Thank